Ding, ding, ding.
All right, good morning. Happy Friday, Ted. How you doing today?
I'm doing all right, all right, all right. It's Friday the 19th of May. We are in no man's land in here in the US where we have all these unresolved dramas in the media we have to contend with.
Part
So
of
yeah, happy Friday.
part of the best part of when I traveled for a year was that I completely tuned all of that out, and I'm telling you, man, I was a happier person. I think it's important to limit the amount of media you intake for not only your own personal happiness but for your sanity, and also to understand that everything they talk about on a day-to-day basis is pretty much irrelevant, and also fear-driven, and most of it's propaganda. So, I think it's a good idea to take long, uninterrupted breaks from traditional media.
Well, it does serve a purpose. I don't like it, but it keeps us afraid, keeps us scared, keeps us spending.
Yeah, that's true. Well, it looks like Bitcoin has dipped a little bit. We're at the 26,000 level. One of the things we want to talk about today, and we'll get to it, is all the fear around what's going on with the debt ceiling negotiations and a potential $1 trillion liquidity crunch that could affect the price. What do we say though? When the price drops, that's an opportunity, and I think we can get right into why we say that. Okay, and I want to pull up a tweet from Carl B. Manger, who is a big Bitcoin bull, but it says breaking Bitcoin shrimp soar to all-time high of 1.31 million coins, adding an average of approximately 26,000 Bitcoin to their cumulative holdings each month. Shrimps for the win. So, if you don't know, they use different types of, I guess, sea animals to denominate your position in Bitcoin. Like less than one Bitcoin, you're a shrimp. So what he's saying here, or she's saying, is that over the last month, people that own less than a Bitcoin are pulling approximately 26,000 Bitcoin off of the market, which is pretty impressive in my opinion.
Yeah, the terminology is pretty funny, but if you Google or search Twitter for the different hodler types or the holder types, you can see the designations pretty clear, or you can see the designations. But this idea that people who hold like one or less, and the growing number of I guess what we talk about a lot here is like individual, like the hearts of like one wallet at a time, one mind at a time, one wallet at a time, and we as individuals have the ability to become sovereign with this whole Bitcoin and crypto thing in ways that have never really existed in the past, and that's a really powerful concept. But back to
Yeah,
this
there,
tweet.
there, there it
Yeah.
is. Yeah, shrimp less than 1 BTC, crab 1 to 10 BTC, octopus 10 to 50, fish 50 to 100, dolphin is 100 to 500 BTT, shark 500 to 1,000, a whale is 1,000, and a humpback is over 5,000 BTC. If you got 5,000 Bitcoin, you're doing all right.
I mean, golly, I'll argue if you got one, you're doing all right
Yeah,
in the
no,
grand
that's
scheme.
that's true. That's true. But yeah. Back to the tweet. You've got, so these are small players. These are people like you and I, Ted, that are dollar cost averaging. Every week, and it's amazing to see. You don't feel like you're really doing anything when you buy 50, $100, $1,000 worth of Bitcoin, but you are, because you're a part of a larger group that's doing the same thing, and the net effect of that is 26,000 Bitcoin a month. So that's around 300,000 Bitcoin a year. Okay, and only ever going to be 21 million. There's estimates that 5 to 6 million are lost. There's about a million left to mine. It doesn't take long for this to really put a crunch on the available supply. Now, there's always participants exchanging in the market, so there's always going to be Bitcoin available to buy. But you throw in the fact that you've got Tether, like we talked about yesterday, allocating 15% of their profits every month to buy Bitcoin. You've got corporations, you've got nation states. This gets interesting really, really fast.
Yeah, it there's so many new participants coming onto the scene as well. There's another chart or not a chart, but a tweet. But the good folks at Glassnode probably have a chart for this metric. It's the number of new wallets that join or the number of new wallet addresses that show up on the network, which implies that there's new participants, meaning new people. They download a Bitcoin wallet app for the first time, or they sign up for an exchange account like Coinbase or Kraken or KuCoin or something to that effect, and they make their first purchase, which generates a fresh receive address and all this great stuff. What I'm telling you is that as we move through time here, the data is telling the story that there are statistically significant numbers of new Bitcoin addresses making their way onto the blockchain, which we can all look at, and we don't have to guess, and we don't have to wonder, we don't have to project our hope and our hopes and our dreams for what this thing can do for us as individuals and as a society, but it's rooted in data, and I think that's another interesting thing. To be try to be fair and neutral. I think there's still a lot to overcome in the market in terms of factors in the market that determine what the current price is and where the supply lives, and then how the supply gets distributed. And the thing I'm trying to spit out is that we still have unresolved issues with the debt ceiling, which we all know will get resolved, but it creates the volatility and really more importantly, it creates opportunities to add, if you were so inclined, at better prices. If you're looking at how to accumulate Bitcoin like you would accumulate something that is one price one day, the demand for it goes up, so the price goes up, and then it goes on sale when demand wanes a little bit. But if you're looking at this on a long enough timeline, you start to understand that these price corrections or these pullbacks in price create very interesting buying opportunities, because the underlying asset is still the same. What changed? It's just the current market price. So anyway, that's what I wanted to spit out there.
No, I think that's exactly right. I think that was a good way to say. That what I like to think about with this too is that people have a really hard time understanding something that has a fixed supply. Okay, and this is something that's somewhat unique to Bitcoin. There are other cryptocurrencies that do have a max supply. With that, you have to take it into consideration. Can that be altered? Can that be voted to change? And a lot of them, they can vote to change it. But Bitcoin, you really can't, right? And that's what's unique about it, in the sense there's only ever going to be 21 million. 4 to 5 to 6 million are lost, depending on where you look. But at some point that becomes irrelevant as demand increases over time, right? And what you notice is a lot of people, like myself and yourself, when you buy Bitcoin, it's something that you plan to hold for a very long time, okay? And I always joke with people like, isn't the government going to come take it? And I'm like, well, they can gladly have some of it for 250 grand of Bitcoin. Like, at some point, these prices are going to, go to a point where I say, okay, I've been in this for a long time. I'm going to take some off the table, assuming we still live in a world where, the dollar has any value. And that's a whole other conversation. But, prices at these levels for long-term holders, what are they going to do? They're just going to continue to hold, right? And as more and more people come into this market, you're going to see more supply taken off the market every single day, as every 4 years, the amount of supply that enters the market gets cut in half. And that dynamic alone is extremely powerful, and I think a lot of people have a hard time truly understanding the effects of that. And then you throw in, you know, our favorite Bitcoiner, Michael Saylor, who talks about one day you're going to wake up and you're going to see nation states start participating in it, and the price will double or triple overnight because there's not enough supply. And you might think he's talking in hyperbole, but there will come a time where big players wake up and they decide, oh, I think I need some of this, and they're not going to have it. And this is also unique in the fact that Bitcoin and cryptocurrencies allow people like you and me to front run institutions. And so that's what we call regulatory arbitrage, because there's probably companies that want to own Bitcoin right now but can't, based off certain regulatory compliance things they need to adhere to. And so it's interesting to look at it from that perspective too. That is the opportunity in this, right? You have the ability still today in 2023 to front run institutions that will inevitably come into the space.
Yeah, and the thing you're talking about right now is a really important thing, because it has everything to do with the arguments and the headwind, I'll call it, in the short term, which is a buying opportunity pursuant to exactly what you're talking about. This concept of front running institutions is that there are institutions that want to buy or want to allocate and hold Bitcoin, but are prohibited from doing so because there's a lot of regulatory frameworks and rules and things that say they are not allowed to buy commodities or buy this thing called Bitcoin because it doesn't meet the instrument that they're allowed, or the types of instruments they're allowed to purchase. There's a lot of rules. So what does this have to do with what I'm talking about? I'm talking about this idea that we've got a regulatory headwind that has regularly rejected the issuance of a Bitcoin ETF, which is an ETF is an exchange traded fund. It's something that corporations and institutions can buy. You can go to the stock, meaning Corporation X and Institution X can go to the stock market today and they can buy ETFs. They don't have to worry about buying individual stocks and all of the issues that come with that. They can buy an exchange traded fund, the ETF, and hold that instrument in the appropriate custodian, and they can, more importantly, they can transact the shares in that ETF appropriately, meaning within the confines of the regulatory framework that they have to operate in. So what is this? Let me say this another way, is that right now there is no there is no ETF that will hold Bitcoin on someone's behalf, in a manner of speaking. This prevents a lot of it prevents the existing appetite for such a thing, the Bitcoin ETF. It prevents that appetite from being satiated. I mean, it prevents people from being able to take action and start to acquire the Bitcoin ETF, because for all of the reasons I don't agree with them, and maybe I'm wrong about some of these things and my opinion needs to change, but that doesn't matter right now. What I'm trying to communicate is that right now today, Bitcoin ETF is not legal here in the US. So I think until that happens, what does that really mean? Like from one day to the next, that means that I have the ability to buy something that corporations with orders of magnitude more capital firepower can't buy today, even though they want to, and they're forced to basically sit on the sideline because the to work around this is just there's way too much red tape. There's politics, et cetera.
Quick interesting point here, not to interrupt you, but if you listen to the CEOs of Apple and Facebook and these companies, these individuals at these companies do own Bitcoin. They see it coming. It's not like they're ignorant to the fact that it exists, right? And it may not be a lot, but it's all relative, right? A lot to them, a small amount to them is a lot to us. But that is interesting. I've seen 4 or 5 of these interviews where they ask, what do you think of Bitcoin? And they'll say, well, I own some of it. It's interesting, blah, 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 blah. But they personally own some. Okay. So they're not sitting here going, this is bad tech. We don't like it. It's a bad idea. The reason they can't do it yet is because there's regulatory issues that they have to. Now, should you get, let's say we get an administration change, hopefully it's sooner rather than later. Not political. This administration is just a nightmare. Things change very quickly. Say you get a new head of the SEC come in, that's somewhat, rational in his or her approach. This could change very rapidly. So from our perspective, we look at this and we just say, okay, like, yeah, we're dealing with some headaches now. The long term fundamental picture hasn't changed. We're going to continue to DCA. And at some point, we'll get rational heads in the space, and you'll get regulatory structure to allow these corporations to come in, and we're already here, right? That's kind of how I look at it.
I think that's a great way to look at it, because we're we have this, like, there's this like unappreciated amount of freedom we have as individuals, and I like that people like Tim Cook and the Sergey Brin's and or other types talk openly about. They're, you got to remember, when you get elevated into public figure status, I mean, you have a choice to make. You can either say whatever you want and deal with consequences, or you can be cautious and regimented and tempered in how you talk about things. And I think that's more often the case with folks like Tim Cook will talk about, yes, I have some. Okay, he won't say, I think it's the greatest thing in the world, and I think you should go buy some, because he knows better. Because the corporate the backlash from a corporate perspective from the shareholders alone would be enough to like ruin things for him. But also from consumers, people in their consumer base, they have to be very, very careful they don't tick them off and cause Warren Buffett to get mad and want to sell all the shares or something like that, which wouldn't be a problem. They have the cash. That's a whole nother can of worms. But the point I'm trying to get to is that these folks are not stupid in the classical sense. They've been buying Bitcoin for a long time and are only now talking about it. And I remember saying this the other day, is that Paul Tudor Jones was on CNBC the other day, and he was I try to be neutral here as best I can. There are voices on Twitter, for example, that cherry picked a lot of what Paul Tudor Jones said, and they say, oh, Bitcoin's the only thing, you can't fuss with the supply, or you can't mess with it. Yeah, that's true. Okay. And he says, I'm going to stick with it. But there's a lot that got left out in the hyperbole around trying to juice up or like get excited about someone like Paul Tudor Jones, who has some serious financial capability to move. I mean, he can move markets if he wants to. But the point I'm trying to get to is that even these folks understand how the world works and how markets work, and they'll talk about things, but they're not. He certainly, and if you watch what he said, watch that whole clip from CNBC, he didn't. I mean, it was pretty neutral. He said some good stuff, but he didn't. I mean, he also said some things that kind of like left me wondering, like, oh, okay. I mean, I don't know that was on purpose. Maybe it was, but the point I'm trying to get to is that these individuals are able to speak like this, in regimented and I fail to grasp the words to describe it any better than that. But the underlying the bottom line, though, is that until something like a Bitcoin ETF that falls into the classification of instrument that has the right regulatory and reporting and it checks all the boxes for an instrument that a corporation or an institution is allowed to own, then we don't see the institutional adoption really go crazy outside of the hedge fund realm.
Yeah, no, I mean, I think that's interesting. It's an interesting way to kind of look at it and think about it. I wanted to jump real quick to this U.S. debt deal article by Coin Telegraph. We talked about this a lot, all this headache over the debt ceiling. And I think what's important to remember is if we get a liquidity crunch, it will affect Bitcoin. Bitcoin really, really likes liquidity, okay? And so if we get prices that are pushed back to 20,000, what you're looking at is an opportunity to buy, right? This isn't anything that's going to affect the long-term fundamentals of Bitcoin. And I don't think it's anything that you need to really worry about. Short term, it's going to be all over the headlines. If this happens, right? We don't know that this is going to happen, but we touch on this a lot. These dips where they make you feel like the world is ending are opportunities to buy and increase your holdings at a lower cost basis. So, you know, this is stuff that you pay attention to, you watch, and I talked about it yesterday. I hope this happens, right? This is an opportunity if it does happen.
Yeah, I wholeheartedly agree. I'll talk about my personal philosophy for just a second here, in terms of what I see when I look at the chart. Like I'm looking at the Bitcoin USDT chart. Just it's a spot Bitcoin chart, and on the daily time frame, I see that. I mean, hindsight analysis here. Okay, keep this in mind. But we saw at the beginning of the year a big run up to 25,000, and it pulled back and corrected to 20,000. Okay, so it was a pretty. I mean, if you all of a sudden started paying attention in February, and then like on February, let's say right in the middle of February on the 15th, you started paying attention and saw Bitcoin at 25,000, and then fast forward to the first week of March. Okay, so 2 weeks later, 2.5 weeks later, you saw Bitcoin's price correct or pull back or go down. However, I mean, the language doesn't matter. It pulled back to just below 20,000, and there was a lot of really challenging sentiment around that move from 25. And then here we go here, and right at that $19,000, $20,000 level in the middle of March. So 30 days later, we saw a very interesting reversal. I think it was the 13th of March. So that Monday or that Sunday, Monday, there was a big move higher. 2-3 days of like really like impressive price action. We went from at $19,990. It was it's over. Everything's done. We can all go home now. We went to 26,000 in 3 days. Okay. And what I think is happening here is that we saw a price run all the way to on April. So the middle of April, okay, on Friday the 14th, we saw Bitcoin touch 31,000 and has since been correcting back down to the downside. And for the last week or so, has been hovering in this, $26,000 to $27,000 range. What I think could happen, putting on my chart, my technical analysis hat here for a second, there's a chance that given the uncertainty around the debt ceiling issue, the uncertainty around what's going to happen if put that in a big box right there, if the Fed raises rates again, another 25 basis points, which I think is not just possible, I think it's probably likely. It creates the conditions for a challenge or perceptual challenges for people or market participants, okay, are going to say, well, at 26,000, given the current conditions and the availability of credit, meaning the liquidity, people's willingness to buy at these levels, we may have to see the price come back a little bit, meaning the Bitcoin might have to go on sale from 26,500-ish, where it tends to be the last week on average, okay? It very likely comes back and does something. In market speak, we talk about retesting levels a lot. And there's this level that happens to be just about 25,000, where if you look, when looking at charts, you can see that this level was important in the past and it could be important in the future. So what I'm trying to spit out here with all these words is that it's possible and it could happen that Bitcoin's price continues to correct lower as more and more people sit and look at the chart and think about, if I'm not in a hurry, and I'm just trying to be fair to everybody here, if I'm not in a hurry and I'm dollar cost averaging on a weekly basis or bi-weekly basis or every month or whatever, and I think, I'm not interested in buying until the 1st of June, for example, and the current price is at 26,000 and the chart seems to have a level of support at 25, then maybe I'll just sit on the sideline. And I don't know if anybody's going to do that. I mean, I'm going to keep buying.
Yeah, I
And
think it's important to look at all this thing in context with whatever your plan is, right? Like, if you're
Mhm.
dollar cost averaging into this on a weekly or monthly basis, the price movements almost become irrelevant. Now, there are ways to dollar cost average in looking at charts and understanding the historical patterns of Bitcoin to dollar cost average at opportunistic times, right? And that's something we can get into, you know, in a later video. But this idea of not stressing what the market's doing over a long period of time, I think is really important. There's also nothing wrong with saying, okay, look, I'm not comfortable right now because there's too much going on. I'm going to hang out for a while and not do anything. And I think that's fine. Here's what happens though. If you do that, you've got to get comfortable with the idea that Bitcoin has a really good, or is really really good at doing the opposite of what everybody expects. Okay, so the whole world could be thinking that Bitcoin could go to 20K or 15K. It just did it at the start of the year. I mean, everybody said it was going to 10K, right? And it turned around and ripped all the way up to 31. So there's nothing wrong with kind of saying, look, things are scary right now. I'm gonna stay in cash, and I'm talking from an investment perspective, and wait to see how this shakes out. The thing that happens there, though, is if you're not in the market, you miss any potential moves up. But if you're okay with that, then that's fine too. You don't have to say, okay, I'm just learning about Bitcoin. I'm going to dump all my money in now, and inevitably, what will happen is it'll go down 30%. Right? You'll freak out. You'll sell. You'll lose money. That's why we talk about always having a plan and always, kind of going into this with a rational mindset that this is a long-term game. There are things you can do short-term if you're inclined. I'm not a trader. Ted likes to trade more than I do, so I'll let him speak to that. But long term, we're still up and to the right. And so because of the stuff we talked about earlier, the shrimps, and the amount of supply leaving the market and the amount of supply that will ever be available, I think over time, right, you're just going to be in a situation where the price of Bitcoin in 5 years is much higher than it is today. But wanted to, unless you had any comments there, I want to jump to this Balaji tweet because I think this is interesting and it kept me up all night.
Before we transition to that, I wanted to share one last thought about like the current price action. And at the end of the day, when I look at the chart, what I'm seeing is that a little bit of this is just my personal philosophy. It's not financial advice. It's not trading advice. Okay, just so everybody's clear. I think that there's an opportunity to continue to accumulate into, or for the rest of this month, into June and into the summer. I think the summer trade, the summer price action will be like, it's an opportunity. I could be wrong, of course, but that's what I'm seeing, and it's got my attention. And I've learned to pay, like, basically, in the same way that Buffett is quoted as saying, "Be greedy when others are fearful, and fearful when others are greedy." There, that plays into my personal philosophy of how I look at this. When Bitcoin was 16,000, I was right there paying attention and acting in a way that I saw fit for my own personal acquisition strategy, not
Very
financial
good.
advice.
Very good. Let's yeah, of course not. Yeah, no, yeah. Ted, everybody just told you exactly what to do with your money. Jump on it right now. I'm just kidding.
Wrong. It's
Yeah.
Trumpeters.
So let's jump to this tweet from Apple and Google, or from Balaji. He says Apple and Google are systematic risks to crypto. If weaponized by the federal government, they could backdoor iPhone and Android to exfiltrate private keys. And I read this. I woke up at 2:15 this morning. I read this at 2:20, and it was like I had a nightmare beamed straight into my eyes directly from my screen when I thought about this. And you know, here's what he's doing. He's just trying to, the same thing with his $1 million Bitcoin bet. He's just trying to bring attention to something with with a tweet like this. This doesn't mean this is happening today. This isn't something to, freak out about. Even though I spent 2 or 3 hours last night thinking about this. Uh, so, the thought here is that as a federal government goes bankrupt, they'll put pressure on these tech companies that, if you think about how you acquire Bitcoin, you do it through an iPhone, a Mac, Android phone. So the main thing I wanted to say about this today on the channel was that this is why it is so important to, when you set up a private key, your own private key, and you move to a cold wallet, you do it in a way where you're by yourself. You don't keep your private key on a Google Doc, okay? You don't keep your private key in notes on your iPhone, even if you hide it in a file, okay? You have to write these things down or buy a steel plate. Do it in a place where you're not around a computer that has a camera, okay? And this may seem extreme, but I'm telling you, it's not. You have to think about these things because it is important. And, could Google and Apple get your private key? Sure. If they hacked your computer, right? And what he says later is that, this isn't a hack. This is what would be considered as a war. Okay, this is a cyber war where Apple has legal authority from the US government to go through all your files and find your private key. Okay, so if your private key is stored on a Google Doc or notes in your iPhone, or you take a picture of it on your phone, they can get your private key. All right, so write it down, do it in a place that's private, and just be really careful with how you store this stuff. Now, this is you could say, well, Josh, if they want it, then they're just going to get it anyway. Well, yeah, but you don't make it easy on them, right? I just think you have to be careful about how you do this stuff. And I think it's great that he's bringing attention to it. I think the solution to this is somewhat complex in the fact that I don't think it's a technical solution, although there may be a technical solution that I'm not aware of. And I think people are working on this, very quickly. But I think this is more of a political thing, into where we have to be willing to speak to our representatives in our government and say, look, you can't let this happen. This is not what we want. And you might not think it matters, but in the same way, you might not think buying $50 a week of Bitcoin matters. It does when enough of us say, hey, look, we're not going to accept this. And so I thought, in general, I just thought it was an interesting tweet. It really made me think of, possible attack vectors in the future. I wonder at one point, though, say you have a federal government that's bankrupt, what leverage do they have over Apple and Google? And then compound that with the fact that Apple and Google would have seen this coming in a world where Bitcoin is necessary. They most likely would own a lot of Bitcoin on their balance sheets, okay? And so the government that's bankrupt, and you'll see it from a mile away, I mean, we're essentially there now, is saying, hey, you have to hack your customers' private information. And Apple and Google might look at them and say, excuse me? Imagine, Ted, if you had your iPhone and one day you woke up and all your Bitcoin was gone because the government gave Apple permission. Would you ever trust Apple again?
Oh God, no. I mean, it would.
We already don't trust the government. I mean,
there's a little bit of history we can lean on here. Is that Microsoft has had this challenge before where they were accused, and I'll take everything I'm about to say with a huge grain of salt because there's a lot of clarification to acquire here. But in broad strokes, what I would encourage is to look at the history Microsoft has had of being accused of having backdoors in Microsoft Windows operating system. But another great example of a backdoor is this whole controversy, and somewhat ironic here is that this controversy around this software application suite called SolarWinds that is being used around the world by institutions, corporations, governments, state, federal, local. It was discovered and published to the public that there was a vulnerability that was a backdoor into this software. This thing was supposed to be protecting data and protecting systems and protecting people and access and all that, but it had a backdoor in it. And this it's I'll just say it's crap like that that more people need to understand can happen. It also is at the fundamental. It's one of the fundamental tenets of this whole open source software movement, OSS, open source software. So at one of the DNA level ingredients in open source, Bitcoin's open source. Anybody can look at the code, and it has been looked at by hundreds of thousands, if not millions of people have looked at it. This idea of open source is it's one way to not guarantee, but to try and ensure that there aren't things like backdoors into software applications. Now, I want to talk a little bit about like what would happen. Apple has. There's also some history here with Apple going public with information in the form of loosely that they were denying government agencies like the FBI were asking them to use what they know about how they built Apple device hardware and software that they engineered so that they could they could get past the screen lock or the encryption that locked a device because that device was in the possession of, I think it was the FBI, but don't quote me on that. Well, let's just, for the sake of argument, assume it's FBI. FBI was asking Apple, "Hey, will you unlock this device?" And Apple was publicly seen to say, "No, that's a violation of that person's privacy," and I think it was the right move. And I know that they've had to deal with the fallout, the consequences of denying that request. But who knows? But do we actually know if they did it or not? I don't know. But the point I'm trying to get to is that we already have evidence that can be. I mean, this can be fact checked. What I'm talking about right now, the FBI made the request. Apple said no. That part we can verify. So you don't have to trust anything I'm saying. This is all verifiable. Just like open source software, you don't have to trust. You can download the code, build it yourself if you really want to, and verify.
Yeah,
so
I think, no, go ahead. I was just going to add that this is what I meant earlier, where you can't trust anybody. You can't trust your phone. You can't trust your computer. And we saw with Ledger. Although I don't think this Ledger thing is as big of a deal as everybody initially made it out to be. I don't think it changes the potential attack vector. I think that existed before and still exists the same way. I think, again, this stuff is really complicated. Okay, like this isn't easy. So don't be hard on yourself if what we're saying sounds like gibberish. I mean, this is stuff that when you start your Bitcoin journey. I mean, it took me, I think 3 years to move to a hardware wallet. And then more to move to multi-sig, and then more to become more secure. Like, this isn't something that comes intuitively, right? And then you throw on top of it this idea that these hardware devices themselves might be backdoored, and you really have to take a pause. But the important thing to remember, though, is if the government is in such a position that they are asking private companies to backdoor customer keys, you might as well kiss the money in your bank goodbye, because they've already hit that, right? That's gone, right? If they're in this position, if they've pilfered everything else, and now they're going down this route, right? That was something I thought too. Is like, okay, well, where can you put any sort of money? Like, say you put money in real estate. All right, well, the government can seize it. All right, great.
Mm-hmm.
And that's the idea behind Bitcoin. That's different, is that it's a bearer asset. If you own the private keys, you store them in a way that can't be found or hacked, right? That's the attack vector, is leaving your private keys on the internet or in a place where they can be found easily by somebody else. It's interesting just to think about this stuff, man, because it's a brain cramp for sure. And I don't know what the answer is. I think what you do here is you have to, like I said earlier, you have to get active. You have to, at the state level, and maybe you see states like Texas and Florida, implement laws that, somewhat prevent this. Or what you see at a state level is something I've thought of in the past, is if these guys would somehow be proactive and do public-private partnerships. Maybe the state of Texas does a public-private partnership with Riot Blockchain, and subsidizes energy in exchange for a percentage of Bitcoin mined to start getting Bitcoin on the balance sheet. Subsidized energy, tax benefits. They pay no taxes for 30 years. There's a way to do this without having to steal it, right? But unfortunately, if you look at government in the way it exists today, they're not proactive, they're reactive. And unfortunately, I don't think they have much of a moral issue with stealing, right? Like, so.
Well, one feather we have in our cap is that as powerful and almighty as the government might appear to be, what they have a really hard time doing is orchestrating and acting without lots of bureaucracy and BS and crap. And it's really difficult for them to act on these things, and it takes a fortnight. So it's kind of like the classic example I envision when I think about a government agency, like the Gensler at the SEC has been asked for the SEC to provide clarity around regulatory framework for crypto industry, okay, at large. Yet they can't. They've tied their shoelaces together with the way they've responded. They're now trying to walk and also run, and they're tripping, they're falling all over themselves. And you see what I mean? The likelihood in the short term that the FBI or the SEC or some other government agency is going to come after any one of us and try to decrypt our cold storage or whatever is kind of, I don't want to call it laughable, but it's just they have so many.
That's what he's saying here. He said, in 2010, in the Arab Spring, you would have thought nobody would have ever thought, Twitter would have been a big deal, right? But it all of a sudden became really big deal really fast, and that's what he's saying with Bitcoin too. Yeah, today we might think this is laughable, but in 7 years, this might be a really, really big problem. And so part of that too is I don't think.
Yes.
Yeah, I don't necessarily know that the government will exist in the same way it does today in 7 years. I think there's major I'm speaking of the U.S. government. I think there's a lot of problems. I think what you're going to start to see is on a state by state level, that they're going to start rejecting a lot of this horse shit that's coming from the federal government. They've gotten bloated. They're too powerful, and they're going to get pushback. And so it'll be interesting to see how this plays out. But I just wanted to bring this up because I thought it was interesting. I'm not a technical guy in the sense that my understanding of this is software, hardware wallets is just what I've learned from reading and trying my best to grasp it. So, if you're looking at this and you have more of a technical background and you understand how these products work, you probably can say, okay, well, there's reason this could happen or there's reasons that it couldn't happen. I just think it's important to, even if you're not technical, to try to understand, how these things work, especially if you're going to be using them. And again, I want to stress, if you're going to use these products to store your private keys, don't be, half-assed with it. Take it really serious. I mean, you're setting up your own Fort Knox. All right, this is your reserve. This is your, life force into the future. You want to be very serious about it and act like it. But yeah, well, Ted just disappeared, flew off the screen. Let me see if I can bring him back real quick. But anyway, yeah, that was a good tweet from Balaji. Makes me think. Kept me up all night, but I think that about wraps it up anyway. I don't know that there was much more we wanted to cover today, so we'll leave it there. Be really careful with your hardware wallets. Don't make this easy for the government or for potentially the government or for hackers that are out there today. Be secure with your private keys. Write them down. Don't share them. Make sure you don't keep a picture of them on your phone or anything that can be hacked. So with that being said, we'll wrap it up there for today. As always, nothing we say is financial advice. We're not accountants. We're not legal experts. So if you enter these markets, you're doing so at your own risk. And we will leave it there for